Hey guys, Max here, and yesterday was another volatile day, this time seeing stocks go up once again and continue their rally, while actually some bad news came out for the economy in the US, but as we all know, the markets right now aren't exactly reacting to the economy, which underpins the markets, and investors are piling into equities on the rather odd idea that they'll prove to be the best inflation hedge this cycle. We also had some new data come out regarding mortgage rates in the US, which is a bit worrying, and a quick update regarding Russia's demands for their gas sales to be settled in the ruble as well, and then just a touch about Boeing and the plane which crashed into China the other day. So what happened in the markets? Well, equities rose for the most part. The S&P 500 was up 1.4% and the Nasdaq was up by 1.9%. The Moscow exchange, after all of those limitations put on the market to try and stop a market rout, still fell another 4% for the day. So not a strong start at all, and that's with 90% of market participants literally banned from selling anything. Bond yields advanced once more. The US 10-year Treasury yield rose 7 basis points to now sit at 2.36%, right on its highs for years again. Oil prices actually fell a little bit, thankfully, though they are still very high, of course. WTI crude oil is now sitting at $111 a barrel, and Brent crude is at $112. Gold prices rose, probably due to its property as an inflation hedge and fears of inflation coming through, though it's hard to say for sure. Per ounce now, gold sits at $1,970. Finally, in the world of crypto, what happened? Well, there were solid gains for the day. Bitcoin and Ethereum were up about 4% each. Bitcoin's currently sitting at about 44,000 and Ethereum at about 3,200. Altcoins, as usual, were sporadic. On average, though, most of them rose by 5 or so percent. Some more, some less, as you would expect. Some very nice volatility, as usual for that market. So what's the sort of bad news we had that the markets are just kind of ignoring? Well, the first is that the most recent data for the US durable goods orders fell 2.2% over the last month for February. This basically suggests that supply-side issues for manufacturers are still a major problem and that they aren't going to be solved anytime soon. Now, this was also twice as bad a fall as was anticipated by the markets. Basically, this is very bad news for inflation in the future because it means people are still trying to buy these products, i.e. demand is high, but the supply just can't keep up, which will force prices up further. Funnily enough, one of the worst aspects of this data set is for auto manufacturers or cars and trucks, which might even mean that despite what the deflation crowd headed by Cathie Wood have been saying over recent months, and actually basically a year now, car prices might not be going down either, but actually going up in the near future once more. We also have COVID cases continuing to soar across China, and the cases announced by the CCP right now are far worse than they were at any point over the last 2 years. We know their vaccines just don't work, and if the CCP continues to try and fight the virus, the only possible outcome here is more supply-side shocks as factories and ports and transport are shut down again. That, combined with things like the Ukraine war and the major squeeze that is already having on commodities, means inflation is certainly, without a doubt, not at its peak, and it's only going to get worse. So why did markets rise on this news? Well, it's hard to say, to be honest. It's not a terribly visible number though. This isn't the unemployment rate or the CPI data or something like that, so not everyone cares about it, even though it is very important. The vast majority of retail investors, for example, will not have heard this news simply because the media didn't report on it all that much. We also have the possibility that those investors who did hear about it just don't care because the problems that we'll see from this data are probably a few months away. So some investors will be thinking they'll just be able to keep their cash invested for now, keep making their money, and pull out later before the real problems arise with a tasty little profit. Finally, there's this idea increasingly gaining popularity that stocks are an inflation hedge, something that by and large I really don't agree with, but it seems a lot of other people do, and they're buying back into the markets because of that, so they're driving this increase in prices. This is probably spurred on by companies like Apple, who have continued to post really strong earnings despite inflation, while all of the smaller cap companies who have suffered and will continue to suffer have just been ignored for the most part. Now, what's the other piece of worrying news? Well, mortgage rates have picked up really quickly so far this year, with the average rate now being 4.4%, far higher than we saw over the last few years. A few months ago, at the beginning of the year, the average rate was about 3%, so it's risen by 60% in 3 months, and the average mortgage payment is rising with that too. Now, I know that loads of people think that that doesn't matter because of fixed rate mortgages these days and how prevalent they are, but that really isn't the case, and there will be a long full-length video explaining why that is out in a few days and why the risk of a downturn in the housing market is actually quite strong right now. Now, the story surrounding the Boeing 737-800 that crashed in China the other day, killing everyone on board, has had a fairly significant update, that being that parts of the plane's remains have been found 6 miles away from the crash site, which suggests that the jet broke apart, at least in some capacity, while it was still in the air. Now, as usual, this story is going to take months for all of the details to come out and for us to learn what really happened, because right now we still just aren't sure, but this lends some support to the idea that it was a failure on behalf of the plane itself as opposed to maybe the pilots, and that's quite bad news for Boeing. Again though, this isn't concrete, and according to the experts, this part could have broken off as a result of the sudden dive the plane took, and not necessarily being the reason the plane crashed itself. If it is Boeing's fault though, it's very bad news for the company, as you would expect. They are already embroiled in controversy regarding the 737 MAX, and China especially, who I believe has the world's largest fleet of 737-800s, is not at all happy with what's going on, as you would fully expect. The share price of the stock doesn't seem to have reacted to this news yet though, suggesting that investors maybe don't think that this will really work against the company. I think that's really quite a risky bet to be making, to be honest, and I really wouldn't be happy to own this stock through this turmoil. To be perfectly honest, the upside from Boeing being cleared of fault here is practically nil, while the downside is far, far greater. Finally, we spoke a little bit about Russia's demand that European countries pay for their gas in rubles instead of dollars or euros yesterday, and I saw quite a lot of people claiming that this is some genius move by Putin and that it's practically checkmate to the West, but I made a specific point of saying that it all depends on how European countries respond. Well, just one day later, Poland, who is the second largest buyer of Russian gas, has outright said it will never pay for gas in rubles and that it would rather have no gas at all. This isn't too surprising, to be honest. Poland has been incredibly strong in its opposition towards Russia recently and has kind of put the rest of the world to shame here. We also saw the EU and the US finally agree to a deal regarding liquid natural gas being supplied to the continent to reduce the reliance on Russian gas. This specific deal will make up about 15% of what Russia usually supplies, so not a ridiculous amount, but significant nonetheless. What I really expect to come from this move by Russia is basically some degree of support for the ruble for a year or so, but after that, alternatives will be made, more liquid gas, more fracking, a move away from gas in general, and so in the long run, it's very unlikely that this is actually the checkmate move many people are making it out to be. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It is completely free to sign up, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than we get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.